Your take on these numbers?
Inflation remains subdued in China. On the other hand, the month-on-month rise in prices, both consumer price and the producer price, should help to ease the concern or fear about protracted deflation in China. If we look at the third quarter as a whole, CPI averaged about 0, PPI averaged about -3%. So the broader gauge of inflation, the GDP deflator, which can be seen as a weighted average of CPI and PPI, may stay below 0 in the third quarter.
Yeah.
In other words, the nominal GDP growth in the third quarter may continue to be lower than the real GDP growth. So if we look forward, in the fourth quarter, we think CPI inflation may trend up because on the one hand, the core inflation may rise along with the economic recovery. The drag from food and fuel would be less. On PPI, we may see a further easing of the deflation. Policy-wise, low inflation and low inflation expectations should allow the authorities to maintain the accommodative macro policy to consolidate the foundation of the recovery.
What do you think could lead to prices to pick up? I mean, this doesn't really show me that domestic demand is picking up in a big way.
Partly this month, I think the CPI is affected by the base effect because month-on-month price increased, partly due to food price, vegetable, pork, but also because of the fuel price as well. And the core inflation perhaps is a more important indicator to look at to assess the underlying momentum of inflation.
And you're already looking ahead to, I mean, it's going to be a massive week next week. GDP numbers, activity data. There's a bit of a disconnect, though, as you've been talking about, with the third quarter GDP forecasts and really consensus real activity. Can you tell us why there is this gap?
I would say, in general, China's recovery appears to be back on track, although it remains quite moderate and show a stop-and-go pattern. But the September number, both in terms of industrial production, FAI, and also retail sales, that could confirm a marginal improvement for the second month in a row. And if we look at the Q3, the third quarter GDP, there should be a sequential improvement compared with the Q2. But because of the low base, the headline number should be lower from 6.3 in the second quarter to around 5% in the third quarter. That's our estimate based on our assessment of industrial production, service. So we think the number may beat the market consensus of 4.5% because I think then we see an inconsistency in terms of underlying forecast of those real activity and the GDP.
And we saw similar inconsistencies back in July.
Yes, as well. Yes, for the second quarter.
That's interesting. We see this tug-of-war now between fiscal stimulus and monetary stimulus. What do you think policymakers are leaning more towards now?
For the moment, at least up to now, monetary policy appears to play a bigger role with the triple R cut, policy rate cut, and also quite, I think, the credit growth much faster than nominal GDP growth. But in the meantime, if we look at the August fiscal number, the fiscal spending is picking up. And this year, because fiscal policy was under-implemented in the first half, actually was tight in the first half, it created room for fiscal policy to be more expansionary in the second half. If I think the fiscal room under the approved budget is fully implemented, our estimate is fiscal spending could grow double-digit in the fourth quarter. So that would provide more support to GDP.